problem. Gotta do what you gotta do. Got to do what you got to do. Look at that, man. Still think that's a green screen. Hey, welcome to the closing beat, everybody. Happy Wednesday. How you doing out there? Good, man. Dr. Horton in the house. Brent's with us. Comments from me. John, how we doing? Welcome, welcome. We are financial advisors here. Potentially the only, maybe, homeless financial advisor that you didn't know. You guys see that video where a little girl thought I was homeless, tried to give me money? Yeah, valuable lessons there, I'll tell you. Valuable lessons. Maybe actually got to be worse than that. Me and Stephanie were watching this thing two nights ago about a lady that injected her husband with succinylcholine, and when you inject it, it kills you, but then it burns itself off or something before they can do an autopsy, so they'd never even see it. And I was watching it, and I'm like, wow. And I look over at Stephanie, and she's like solid staring me down. Staring me down, man, so we might have to watch out. If you see Eric here one day helping us out, then it didn't go well. Hey, speaking of going well, tomorrow's going to be awesome. Wine and Wealth. So we are going to do a couple things. So we're going to be talking about some updates and things like that, but we're going to also focus on how to get you to think smart about money. Everybody says, think differently about money and stuff. Nah, we're past differently. You got to start thinking smart about it. I'm going to go over a whole bunch of different things that are just examples, but I'm going to go into detail about how do you actually handle it. Let's say next year you buy a property, you qualify as a real estate professional, you get the 80% bonus depreciation. How do you actually do that, right? How do you actually use an FSA versus an HSA to save a little bit more money if that's the case? All kinds of good stuff there. So I'm going to be going through that tomorrow with Wine and Wealth. In our Notes from Jazz, I hope you read that this weekend. We talked about the market bouncing, why it would bounce, and all that good stuff. That's exactly what we've seen so far. And some of the fin tips this week, those are free and open to you guys. I did one that probably went out yesterday. What happens if you get a 401k check and it's made out to you and you just get it and you're like, what do I do with it, right? I was trying to roll it over. It came to me, so all kinds of good stuff there. It's tomorrow. That's tomorrow. You see what's happening there? It's coming out tomorrow. We got a schedule around here. Anyways, where do we stand with the market? You see what happened today? We were down pretty good overnight, and then even into this morning, then the market's open, we were down as well. And we started this rally back. That's a good sign, right? For those of you that want to bet that this is the market bottom, that's not a problem right there, right? You had a sell-off intraday that regained almost all, at one point, had regained all of its losses. That's a good sign. The market's now, if you look back from Monday and Tuesday, it's gained over 5%. There's only 3 times in history, had to look back and see this here, there's only 3 times in history that a 5% gain in a 2-day stretch was actually the bottom of the market. That's the entire history, right? So right now we have a 5% rally off of the lows. There's only 3 other times in history that something just like this indicated a bottom officially in the stock market. That would be 2002. 2009 and 2020 after COVID. The problem with that is the bounces that came after that 5% rally, those 3 times and only those 3 times, that's set out to be monster bull markets. You may be familiar with 2002. If not, you're familiar certainly with 2008 and the crash and all that great stuff. The low in 2009 and of course the COVID 2020, well, those were rallies you didn't want to miss out on. So on one hand, you got me saying, okay, this is kind of rare that the 2-day stretch of 5% is actually going to mark a bottom. There's only 3 other times that's happened. What are the chances? But on the other hand, you're like, but if it happens, I don't want to miss out on that, right? So a real dilemma that people have going on here about what to do. In the meantime, the market is continuing the approach of, yay, the economy is weakening. That's what's causing this rally. Yay, the economy is weakening. Why would that even be the case? That means that potentially we have lower inflation, which means lower rates, which means stocks should have higher valuations, which is causing the market rally, right? So you put those sort of economics together there. There's a lot of could-be's out there. That's the problem with this market rally. There's a lot of, well, maybe, and if this happens, and when this happens, oh my gosh, we've got a bottom. Still a lot to be said there. That's a tough one. In September, there were 1.1 million less jobs available, which is a big number, but still there's a lot of jobs out there. And yet we celebrate. Employers, public companies, are mentioning that they're cutting back on hiring. And yet we celebrate there, right? They see what's going on. They see a slower economy. They see higher interest rates, and they go, let's not hire people for the moment. Let's just enjoy what we have. Remember, we're going to hear from him in 2 weeks. Jerome Powell actually wants a weaker job market. Those are his words, not mine. I'm not projecting here. That's exactly what he said he wants, a weaker job market. That's what's going to help produce lower inflation, we hope. The goal is with a weaker job market, wages go down, right? So a little bit of an economics lesson here today with what's going on. All of that stuff going together, well, if that works, we got a recipe for a higher market. If one of those cogs comes loose from the machine, we don't have a higher market. And so you're basically betting on this rally and for all of that stuff to continue, everything I just said, to go perfectly smooth, and then you're right, we don't make a new low. Also, I want to point out we're hitting midterm election stretch. Typically, October is when we start saying this is a midterm election season in the years, of course, that they happen. And I want to show you where we stand here. So we'll go over here. I've shared this with you in the past, but do want to point this out again. Typically, the low in the market, the average low in midterm years happens right at the end of September. What just happened? Like, we literally just marked a low at the end of September. So as of now, we're participating with the historical average perfectly. The blue is the midterm election years, choppy, messy, and then we mark that low right before the midterm elections start, finishing the year with an average bounce to take us to the end of the year. In the background, we put all of the years just so you could see the average performance of the stock market day by day, just plotted it out basically, throughout the year. One would hope that these, what we call it, late year rallies, October, November, December, like we've talked about, that tend to be better performers. One would hope that that continues. And this is what I was referring to. Here's the average performance of the Dow in October, 1.38%, 1.99 in November, 1% in December. So those two things go hand in hand. It's just this time we're showing the midterm elections in there as well. Now, what about midterm elections years that are down? Right? They're not average. Just like this year, we're down. So let's take a look at that. We have to create some guidelines here. So we say midterm years that had more than a 10% decline going into the end of September. 1962, 1966, 74, 90, and 2002, here are your double-digit midterm election years where we were down. That's fine because we're doing the same thing here. All we really care about is what happened going forward. I shared this with you before. If we look at the last 3 months of the year, every single one of those times was positive in Q4. That's a good sign if we're going to just use these stats here. Decent returns as well. We're already on pace to break almost all of these. So that's a good sign. If we look a little bit further here and say, well, what about being down in a midterm year? What about the next year after that? Just fully go a whole year to the next October. What do we have? Every single time the market was higher, double-digit gains across the board. So midterm elections, they're going to be exciting, and it's all this stuff where we start hating each other again. But you got to do what you got to do and vote for who you got to vote for. When it comes to the stock market, it tends to like to see no change. So exactly what we have now. We don't have Republicans in control. We don't have Democrats fully in control. They like to see no change and preferably a tie like that. So if we stay the course, that's I would give another thumbs up to a market rally going forward. So see what we have there. Let's take a look. Crude oil. Did you happen to look at crude oil here today in the news? No? Another rally up about 2% on the day. OPEC cuts production by about 2 million barrels per day. That's from November going forward. So the headlines, I won't say fake news, but misleading news today because it's a big number. When the Dow gains 1,000 points or loses 1,000 points, we look over there. But in reality, it's only 30 stocks, right? They're big stocks, but they're 30 stocks. It's not indicative of the entire market. Usually it does bleed over to the rest of it, but it's just a headline number that's impressive. 2 million barrels per day is a nice headline number, but in reality, there's some underlying things going on. Here's your lesson. The actual effective decline in the OPEC numbers is more like 500,000 barrels per day. Is very similar to what we've been expecting. So that's why you don't see monster volatility here. You don't see the markets going crazy there. The reason for that is because Russia, which is a part of OPEC Plus, they're already underproducing. they're in the middle of trying to take over another country, right? They're a little busy. So they're already underproducing, which means 2 million barrels per day we're factoring in with them at full production. So if you look into that, you go, all right, that's not really a big cut at all. It's actually pretty flat. It's a little bit more than we were expecting, but it's actually kind of a flat production quota going into the end of the year, and that's probably why you didn't see a whole lot of activity going on here. If we go over to bonds real quick, another sell-off in bonds. Oh my God, we continue to try to come off the lows. Today was a little bit different with some of the econ numbers that we had coming out. This rally hopefully continues because you need it, right? The 60-40 portfolios, 70-30, 50-50s, all of those portfolios that have a greater percentage in bonds, you've been crushed. What's going on, right? You have a bond market that's falling with the stock market. Same picture. So there's no safety, right? Typically a 60-40 portfolio is, well, when stocks do well, my bonds won't do so well, but they're less volatile, so it won't be a big deal. I'll still enjoy some gains. When my bonds do well, the stock market has a bad year, that's okay. They'll kind of help to offset each other, and maybe there's a total yield in there that helps, offset some of the pain. What happens when they both go down? That's not good, man. That's what's happening now. If you take a look, I shared this with clients and I believe with you guys before. Here is bonds versus the stock market and their performance. So you obviously have your normal graph here, right? I'm going to make it really simple. If you go to the right and up, this would indicate stocks and bonds returning something positive. If you go to the right and down, this would indicate stocks having a bad year, but bonds having a good year. Oh, that's helpful. If you go to the left and up, you're saying that your bonds had a bad year, but the stock market had a good year. Well, the worst of all of them is if you go to the left and down. That means that bonds lost and stocks lost. How many times has that happened? Well, 3 other times. How many times has it been this bad? It's never been this bad. Actually, this is a little bit outdated here. So a little bit of trouble there that we could certainly welcome either a stock market bounce going into the end of the year or best case, a bond market bounce. We didn't see that today, but hopefully that, can work itself out and we'll see what happens. So definitely a lot to think about there in terms of the bond and stock market being correlated. So it's just something that we're keeping an eye on. Looking around the rest of the market there, the NASDAQ performed basically just like the S&P. The Dow did the exact same thing. Bitcoin remains right around 20,000. There's not much new to say there, so I haven't covered it. And gold pulled back ever so slightly, but that looks more like a bottom if you're following along with that. Okay. A little bit off the main page type news here that's actually pretty interesting. By the way, that crude oil production cut, that solidifies what we talked about yesterday. Remember the forward roll on the futures contracts? A little bit advanced, but that just solidifies it. So if you want to check that out, a little bit of an advanced lesson yesterday. Okay, here's what we've got. Earnings season coming up. A week, 2 weeks, something like that. The thickest part of earnings season will be the last week in October, meaning the busiest, the most number of companies reporting. There's something interesting happening in the world right now, in the U.S., I should say, where in September, 7% of the S&P pre-announced or reported their earnings expectations based on their numbers early. So they've got an earning date set in October, maybe early November. They came out in September and said, here's what we think. That's not normal, right? At the moment, we're sitting at 13% of the S&P has already pre-announced their earnings. Okay, well, that's different. To give you an example, we'll go over here. Here is every earnings season, going back as far as I could at the moment, and the number or the percentage of companies in the S&P that reported earnings early. What do we do with that? We're at 13% now. We saw this goes into the first quarter. That includes the 7% from September. I'm sorry, that goes into the second quarter, which includes the companies from September. We're focusing on third quarter earnings coming up, even though we're in the fourth quarter, so we get that. COVID. We remember that, right? You remember when all these companies started saying, we have no idea what to expect for earnings, so we're just throwing a number out there early before we even figure out what the numbers are. It is not normal for companies to pre-announce their earnings in a strengthening economy, not stock market, strengthening economy. They tend to pre-announce their earnings into a weak economy. What's happening? they're starting to report a little bit more into what they perceive to be an weak economy. Where's the opportunity here? Well, if you're an options investor, you could be an options trader too, but if you're someone that has a core position and you use options around it, this includes you as well, you get to kill two birds with one stone. You get it? Because you're participating in the increased implied volatility of the potential pre-announcement, and you're also participating in the volatility of the earnings day, because there's a chance it changes, right? So really, really cool there. So let's define what you would look for. I can't tell you what stocks to look at. I can give you examples, but I get in trouble if I tell you specifically. That's an SEC rule. That's not me. So, but let's look a little bit forward. First of all, how far out will they likely report? The sweet spot's 10 to 20 days. So if a company reports at the last week in October, well, that's next week, right? So next week, you will likely start to see major companies pre-announce their earnings. There's already been a bunch of them, but that's the sweet spot there because it's the busiest week there. Stocks that will have the biggest moves based on their pre-announcement, I want you to think FedEx. They pre-announced. That was a monster move. Biggest one-day loss ever for FedEx. The reason that what you're looking for is stocks that are large bellwether companies that also give you an insight to the economy and their competitors. So naturally, FedEx pre-announcing gives us an insight into what UPS might do. So UPS would be an example of something to look for there. CVS Healthcare, they pre-announced their earnings. That gives you obviously an idea into the healthcare sector and their competitors, Walgreens and the like. FedEx, I gave you as an example. Outside of the box a little bit would be like Coty, C-O-T-Y. That they're in the makeup and lotions and potions space there. Gives you an idea into consumer staples, right? And so you're looking for those companies. Give you a couple of examples. You'd be looking for Walmart. If they pre-announce, what do you learn about the economy if Walmart pre-announces, right? If you own Walmart, if the volatility is starting to creep up there a little bit, you might want to look at that. HCA Hospitals, Chipotle would be another one to look at. They have not pre-announced, but they're likely to do that. They're likely to be one of them that does that. The point being that if you are one who trades around a core position or uses your investments as a way to generate income, this is the quarter you want to pay attention, right? Because there's more juice, there's more meat on the bone for your normal option strategy. So I've been a little bit more advanced with you guys this week, but I don't know, the opportunity's there. I want to share some things with you. The point being, think a little bit differently, because the big guys out there, like I mentioned yesterday, they're not trying to guess that ExxonMobil is going to go up or down. They're realizing that there's a 24% annualized return that's essentially fixed in stone for the moment if they just simply hold the futures contracts. That's what they're doing. If we know that companies are going to pre-announce, what's the strategy, right? Well, how do we participate in that? Well, there's implied volatility. There's extra, premiums. There's extra juice in those premiums there. So you got to start thinking like that as money gets tighter, because in a choppy market or a very scary market, the people that guess what stock is going up or down, they're behind the game. They're playing a whole different game that you really want to play in years like last year when everything's just going up. Anyways, off to the races here. I got sidetracked a little bit. You see what I do? Okay, stocks in the news. AutoZone, they're buying back more shares. That stock was higher by about 2% today. They're buying back another $2.5 billion. That's now another 6% of their market cap, which is good for them, right? That's a good thing for getting a stock price to go higher. Twitter is still working on moving higher there. Elon Musk puts out the thing, we talked about this, going to buy the company there. And the assumption is, so you guys know about apps in China? In China, an app doesn't do one thing, it does everything. So you use an app for every single thing. You don't go like, I'm going to go to Facebook and then I'm going to see an ad for something. Then I'm going to go research that in Google Chrome and I'm going to see if I like it. And then I'm going to go shop for it on Amazon and then compare it to prices everywhere else. Then I'm going to go to Capital One and use my rewards points. You see what you're doing? In China, it doesn't work that way. There's one app where you do everything. Each app is trying to be the all-encompassing, don't leave us, just do everything you need to do here. You want to schedule time with a friend to have a meeting or call or something, you're doing it in the same app that you are watching their kids post, pictures of them playing soccer or whatever, right? So it's trying to create that image there. And so The assumption is that Elon Musk would take that approach. By him owning it, maybe taking it private, maybe making the source code public, that now it becomes Twitter of everything, right? And that would obviously be very valuable there. So I don't know if he'll do that, but that is the assumption today, which is causing more gains there. Apple reiterating their beliefs and their thoughts that they're weighing out the options of moving their now AirPod production to India. They're moving things little by little, if you've noticed and been with us here for a few weeks. Helen of Troy, they did report earnings, maybe a bottom here, pretty significant reversal where we gapped down, flushed everybody out, and then it spent the entire day recovering those losses and going positive on the day by not a small amount, to the tune of 3.5%. If you're not familiar with these guys, you're going to think they're a, I don't know, conglomerate. They own a bunch of brands, right? So they own like Pure Water, you know, the filter things that you use and attach to your faucets and stuff. Vicks Vapor Rub, they own that stuff as well. If you've ever seen a dry bar in your neighborhood, they own that one as well. Do you shave your face with the Braun razor? That's them. So anyways, that's what's going on there, and very promising going forward for them. They did lower guidance going into the next quarter, but beyond that, looking pretty good. And I realize I put AutoZone on there twice, so I apologize for that. That's basically all we got. Now, tomorrow, you have, aside from the normal natural gas numbers, you've got 1, 2, 3, 4 Fed members speaking, and Norwegian Cruise Lines is having their investor meeting, so a chance for them to pre-announce their earnings. See what's happening here? See how that goes? I think Hasbro was the one that did it today. All right, I went through everything I wanted to go through. I will try to answer your questions if I can answer your questions here and see what I can do. Glad you liked the lessons here today. Appreciate that. You're amazed at the news that Elon's interested in buying Twitter again pushes the stock higher. Is everyone's memory really that short? This time's a little different, I would suggest, Chris. It's either something's going on there. It's either he buys Twitter now, and now he's got the financing and all the deal, all the money in place of how he's going to go about it. So this time is probably a little bit different. Yeah, what's up, Tim? Yeah, homeless Harry, man. Just talking to somebody about that today. Yeah. Break the SEC law. That's a stupid rule that you can't give specific advice to someone that you don't know their risk tolerance, their financial situation, things like that. So I can do it in Wine and Wealth, and we often do. We'll talk about individual stocks and more detail about what's exciting, what's not. If you're interested or if you're a client, remind me. And in the Wine and Wealth tomorrow at the end, we'll go through strategies on those stocks, right? So I'll just tell you the stocks that are very likely to pre-announce and what would the strategy be there? Like what would you actually buy and sell if that's something that's interesting to you guys. Got a little list. I'm not much of a Twitter guy. It just kind of feels like a negative place, man. That's where I stand on that. I hope that changes. I mean, maybe a lot going on there. Jim Cramer does not fall into the same rules because he is not in the same camp, not a registered rep or a registered advisor. Your tolerance, you want to retire in 2 weeks? All right, so you need a biotech stock. You see what BioMarin is doing? I don't follow this much, but BioMarin, their drug, I can't remember the name of it. I was trying to find the name. Their hemophilia drug, Roctavian. They're going to price that at about $1 to $2 million, maybe $3 million per patient, which they're going to get the FDA approval probably in the first quarter next year. That's a $55 billion drug, right? At the low end. If you take 30,000 people that have advanced cases of this, I was reading through that today, and I'm like, I so desperately want to understand that stuff, but it just bores me to death. Yep. What do we got here? When the Feds are on the Bears side, I trust the Bears. They're still on the Bears side. Yeah. You like UPS talks of a future strike? Yeah, it could be. Yeah. And they're hiring less people through the holiday season, too. How about those semiconductors? What about them, man? You looking at Taiwan Semiconductor, the largest by weight, the largest semiconductor in the space there. Tough one to try to pick that versus what the government just did with the new CHIPS Act. So we're going to be expanding in the U.S. chip production, so in New York, apparently, of all places. But that's a tough one to make a long-term bet on that. Hmm. What happened to the Eminem saxophone? Oh, where's that guy? Oh, yeah, he's right there, man. Yeah, he's there. It's empty, I'll tell you that. It is empty. Right. Yeah, definitely empty. Okay, so a little bit more advanced stuff this week so far. We'll try to keep that up. But if you're new and you're watching what we talked about yesterday, the day before, and today, not too common. There's just a lot of interesting things happening with the dollar and oil, things that people don't often think about. And I like to share those things with you. So when you see it on TV, you go, that Dustin guy, man, he was right. Look at that. That's something else, man. It's my guy. All right. We'll be back tomorrow to do this all over again. And don't forget about Wine and Wealth tomorrow. We'll make a lot of fun out of that one. And I should have our special drinks ready to go as well. We'll see. All right. See you later.